So the Nasdaq in the US is down 2%, and that's because Google CEO Sundar Pichai has poked a very big bear. He's suggested that the entire AI bubble could burst and shake every single tech firm, including Google, that won't be spared. So is he right? While there are a lot of analysts that are saying a AI bubble bust at this point could be just as bad as Y2K or any other recession we've seen in the US, and it will shake Indian tech companies and the Indian stock market. Let's examine the whole story today. We'll talk about what Pichai has said, what the markets are actually doing, and why Nvidia CEO seems to disagree completely with Pichai, and what it means fundamentally for Indian investors and for Indian markets. So remember, like, share, subscribe, share this video with anyone you think will find the information useful. So quick primer, what is AI? It's a computer system that performs tasks that normally need human intelligence. So basically you feed, a machine massive amounts of data, it spots patterns, and it starts to think strategically as humans would have thought to come out of those problems. Now, fundamentally the important thing is massive amounts of data. So it takes massive data rooms and data processing ability in order to run AI, and that sort of technology also requires a lot of money as investments. So why is this at the beginning or the middle of what is being called a bubble? What is the size of the market that we're talking about? Globally, the AI market is worth, and hold your breath, $392 billion in 2024. It's expected to grow to $10 trillion in 2034 with an annual growth rate of 40%. Right now, North America is the biggest market with over $140 billion worth of AI-related revenue in 2024 alone. So in other words, this isn't a small tech trend that's happening on the side. It's a massive global industry worth trillions of dollars, and there's a lot riding over it over the next couple of decades. Now, what has Sundar Pichai said that has made everybody nervous? Now, he has talked about an AI bubble. A bubble is actually when the price has run up so high that people are willing to pay multiples of what it's actually worth on paper because they believe that's where the price will eventually reach. So a lot of times this run up is driven more by hype, sometimes by FOMO, rather than by fundamentals. So if I were to give you an example, right? Let's say there is a sneaker that is cool and trending and everybody wants one. And it costs about, say, $18 to make. And it's currently selling for $100, but actually it's trading in the resale market for $2,000. So anybody right now which is buying that sneaker for $2,000 knows that it's not actually worth $2,000, but they believe that the price will keep going up because people really want this product and it's in short supply. The day that people lose that belief that the price will keep going up, they will start to sell instead of buy, the price will crash, and that is where the bubble will burst. We've seen this happen in the past. Now, what Sundar Pichai is effectively saying about the AI market today in investments is that elements of irrationality in terms of valuation investments are starting to look a lot like $2,000 for a sneaker and not really what it's actually worth, or closer to what it could be worth. It's become completely irrational. Let me tell you now exactly what he said. So in a BBC interview, he basically called this, and I'm quoting, an extraordinary moment for AI. He also said there are elements of irrationality in the current boom. He warned that if this AI bubble were to burst, no company, not even Google, would be immune. He said although Alphabet, which is Google's parent company, might be able to weather the storm, the pain will be felt across the entire tech sector. He's also admitted that there are massive energy costs. Computing power needed for AI is so huge, like I told you earlier, it could even delay Google's net zero climate change targets. At the same time, he's not saying that AI is fake in terms of the tech or that it's overhyped. He's saying that, that there might be a problem with the valuation. Now, let me also remind you here that Google is investing billions of dollars in AI infrastructure in the UK and in the US and everywhere else, even in India. New data centers, more research, expansion of DeepMind and training new models is what Pichai is actually doing. Pichai's message is nuanced. He basically says the technology is real, but the market around it is overheated. Now, Is Pichai the only voice that's saying it? No, we've heard other people say it as well. Sam Altman of OpenAI has openly said that investors are overexcited about AI and someone is going to, and I'm quoting, lose a phenomenal amount of money in this wave. Jeff Bezos has said that the hype cycle, in which every experiment gets funded and investors struggle to tell good ideas from bad ones, he calls this an industrial bubble, not as dangerous as the banking crisis, but still likely to end in a shakeout. So they're all predicting that a shakeout is coming. And then there are the investors. Peter Thiel's hedge fund, for example, which is called Thiel Macro, has reportedly sold its entire stake in Nvidia, which is about 538,000 shares, roughly worth about $100 million. So he sold his entire stake in Nvidia worth $100 million out of concerns that there is an AI-fueled bubble in tech stocks. There's Michael Burry, the man who famously bet against the US housing market in 2008. He's taken a bearish position on AI names like Nvidia as well. So in other terms, some of the what might be globally accepted as the smartest names in tech and finance are currently displaying publicly that they are nervous about the AI financial bubble. Not the tech per se, but the financial bubble. There's one voice that's standing against it, and rightfully so, one would expect. Jensen Huang, the CEO of Nvidia, which is now the world's most valuable company in market cap, he says that he sees something very different from a bubble. His argument comes in three parts. First of all, he's saying traditional computing is hitting a wall. CPU-based systems cannot handle modern AI workloads, and so industries are shifting now to GPU-based systems. Secondly, he says AI is not just a feature, it's a platform. It is changing everything, he says, from generative models that rewrite how we search, to advertising, to engineering, design, coding. All of these things simply did not exist before. That's his second argument. And third, he says that physical AI is coming, AI agents that can reason, plan, act on their own, robots that can work in the physical world. All of this needs computing. Now, to add it up, Huang is basically saying that this is not a short-lived bubble. This is a structural shift in computing works. The way we have done everything up until now, pre-AI and post-AI, is going to be completely different, and the technology that will support that change was not going to go out of style, is his argument. Now, Nvidia's numbers supporting his confidence: the quarterly revenues of around $57 billion, with $51 billion coming in from just AI data centers, and the guidance of $65 billion for next quarter. So Nvidia's results have become sort of a pulse check on the AI boom. And it seems like the patient seems healthy. So what is the problem really, and why are people worried about this possible bust? Now, here's the real thing. There are about 5 to 7 main players in this AI tech boom in the US. They're controlling everything. And they're actually just moving money and contracts from one to the other. So let me give you an example, right? It's a very specific example. OpenAI signs a deal to buy chips from AMD. In return, it gets the right to take stake of up to 10% in AMD. So it is now basically a client and an investor. Nvidia plans to invest $100 billion in OpenAI. CoreWeave, backed by Nvidia, sells systems to OpenAI. Oracle spends tens of billions buying chips from Nvidia to build data centers for OpenAI. SoftBank, which owns Nvidia, or owns a stake in Nvidia, joins Oracle and OpenAI in a massive data center project called Stargate, planned at around $500 billion in spending. So basically, it's a tiny club of companies that are investing in each other. So they're buying stake in each other, they're buying each other's products, and they're driving up each other's valuations. So it almost seems like the pool is too small. The pool of believers is too small. They're all sort of, when money moves like this, it has a domino effect. If one of them falls, all of them will fall. And analysts are worrying that this is sort of creating a mirage of growth, that it appears like growth, but these numbers circulating inside a very tight circle are pushing up prices and valuations until one weak link appears. Returns start to disappoint, and the whole chain will then unpack, because they're all so tightly wound together that they can either survive altogether or none at all. Now, this is what reminds people of the Dotcom bubble. for those people who are young enough to remember the dot-com bubble. Lots of interlinked deals, sky-high promises, not enough proven long-term, profit. And what happens is basically when there's new technology that comes in, and we've seen this happen before, people start to, believe that it will change the way we live our life. But the expectation is so high and it's not commensurate with what is actually happening on the ground that the stocks run up higher than the actual tech can support. So here's the question. Are we actually looking at a dot-com moment? There are similarities, right? Do we have sky-high valuations? Yes. There are currently more than 1,300 AI startups valued above $100 million. There are 500 AI unicorns, each worth over $1 billion. AI spending is measured in hundreds of billions of dollars. Mega cap companies, Amazon, Meta, Microsoft, Google are pouring money into data centers and chips. There is also complex circular deals, like I pointed out, between that small group of companies. But there are also important differences between what is happening now and what happened during the dot-com sort of bubble. Today's leaders, which is Microsoft, Google, Amazon, Nvidia, are profitable. They're cash-generating giants. So they're not sort of loss-making dot-com companies. AI is already baked into the products that you're using. So every new phone that hits the market, every new laptop that hits the market, every new service that hits the market is using AI already. Search, ads, cloud services, productivity tools. So it's already generating revenue. It's a proven tech. So this doesn't look like a pure fake story bubble. It looks more like a real tech innovation and revolution that has pockets of excess and speculation that might actually pop and hurt, but it might not kill the whole thing. The question to ask, though, is when the biggest voices in the US are actually warning tech investors that this may be a bubble, what does this mean for India? In the short term, it will mean a knee-jerk reaction for India. India IT and tech stocks might fall in sympathy with the global markets, but experts are pointing out that Indian IT has a long history of adapting to new technology and to waves. So we had the Y2K wave, we had the outsourcing, the cloud, and now AI. We've managed to so there is a bump, we hit the bump and we get over the bump. If the correction is orderly, some analysts believe that India could actually benefit. Global investors will rotate money out of the Indian market into parts, out of AI trade into more diversified Indian markets, I beg your pardon. So the money will start to move. You might actually get opportunities to buy good Indian stock if there is a fall in our market compared to a fall in the US market, but it's not likely to be about our fundamentals. So you'll see a day or two of, or maybe slightly longer of markets coming down in India, but then it'll recover quite quickly because our fundamentals are strong. Also, they believe that foreign investors will then pull money out of the American markets and look for more attractive options. India tends to always find its name on that list when you're looking for attractive global options. For Indian IT companies, it is a risk if global clients cut or delay their spending. But it's an opportunity for Indian firms who are already building AI tools and services and platforms for global customers, because then you will become a good alternative. So for Indian investors, the message is pretty simple. Don't chase the hype. Don't panic if there is a correction of any sort. Actually, just remember the fundamentals of why you hold the stock that you hold. And it's very likely that if you see a bit of a dip, it's going to come back quite quickly. So is AI a boom or a bubble? The answer is a bit of both. So there's, on the tech front, like I said, there is a shift. It is going to change the way we search, the way we work, the way we design, the way we code, the way we build products, and there's going to be real money in it. But there's also speculation, and there's also circular money flows and sky-high expectations. So Pichai's warning is simply this: don't confuse the genuine technology with a bet that will pay off. Be a little more careful about what you're actually betting on. So for India, I think the task is clear. We have to keep building talent. We have to keep building infrastructure and regulation. That is ours. So we're not dependent on what the US is making or investing in, but we're actually investing in our own tech and our own ability of AI. And of course, as investors, stay excited about technology, but not blinded by the hype. Leave me a comment in the comment section of what you think is happening, with the tech bubble or the boom, with AI in the US.